Investors are becoming increasingly concerned about the state of the U.S. economy. More and more macroeconomic reports are showing signs of a slowdown, reinforcing expectations that the U.S. Federal Reserve is likely to stop raising interest rates. Against this backdrop, the U.S. dollar has weakened against its counterparts. In our video review, we will find out what events will shape traders' sentiment next week. You are watching a trader's calendar. The state of the German economy is even more alarming. If the US economy may slide into a recession, the German economy has already suffered one. In the second quarter, the country's GDP stood at a zero after 2 quarters of decline. Now, investors are trying to assess the prospects of the German economy. It may sink back into recession or start growing. On a Monday, German trade balance data will be closely watched as a barometer of the health of one of the world's most export-dependent economies. Markets are also speculating about the sluggish recovery of the Chinese economy. However, economic data has finally started to post positive figures. On Tuesday, China is likely to encourage investors with the news that its economy is recovering and may have even accelerated thanks to monetary stimulus from the Chinese central bank. The optimistic sentiment may increase risk appetite in the market. As a result, the Australian dollar may appreciate as the Chinese yuan's counterpart and as a risky asset. However, the Reserve Bank of Australia's meeting will have a more significant impact on the Australian currency. The majority of analysts are confident that the central bank will keep its key interest rate unchanged. During the last meeting, the regulator assured that further tightening may curb inflation, which is still far from the target range of 2 and 3% on a yearly basis. However, verbal intervention is not enough. It requires real action to decrease inflation. As a result, the expected pause may weaken the Australian dollar. Despite the fact that inflation in Australia is still above the target range, it shows signs of a cooling down. The country's economy is trying to show growth, albeit insignificant. In the first quarter, growth rates slowed to 2.2% from a 0.6% on a quarterly basis. In April-June, GDP growth is expected to stand at 0.3%. According to forecasts, the yearly growth rate of the Australian economy may continue to decelerate to 1.7% from a 2.3%. In other words, the Reserve Bank of Australia's decision to pause and assess the state of the economy was the right one. At the same time, the Australian dollar may lose ground against the US dollar on this news. Investors will be able to assess the Bank of Canada's decisions at the end of the trading session on Wednesday. The regulator will announce the results of its meeting on September 6. By the way, there is no consensus among analysts in predicting the outcome of this event. There is a high probability that the rate will remain unchanged, but some are sure that the Canadian Central Bank may raise the rate by 25 basis points. The Governing Council of the Bank of Canada may be persuaded by a rather strong level of consumption and soaring inflation. In the event of a rate hike, we expect to see the Canadian currency strengthening against its US counterpart. In addition, the fundamental backdrop is unlikely to support the US dollar. On a Wednesday evening, the ISM Institute of Supply Managers is expected to release data on the services PMI. The index may tumble, reflecting the cautious optimism of the U.S. entrepreneurs about business and prospects of the U.S. economy. Investors are unlikely to continue buying the U.S. dollar on the news. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.